Start with this. So on the monthly time frame is where you will start the trend line drawing. So from the top like this, you find a way and see you and drag it down like this. So you find a way to see if price was touching the trend line, and for a trend line to be valid, it needs to have a minimum of two touches. So the more touches for a trend line to be valid, it needs two touches minimum, and the third touch is going to be for the entry. So the third touch of the trend line is what we are going to be using for a trade entry with maybe support and resistance. So now this is how you do after you identify the trend of the market and you have drawn your key level. So then you will draw the trend line as a guide as to how price is going to be moving next. So this is how the trade is going to be. So now price was in a range at this region, and then price broke out. So this was the trade you got in, like that you are showing me earlier. So price has already broke
Yeah.
yes, price has already broke out of this range, and then price has still come back to retest it. So this support level has turned into resistance. So price is respecting this level, but one thing, price might wanted to retrace before heading lower. Let me show you what I mean about that. Okay, let me do that on the daily. Okay, so price was though I was also expecting price to continue heading lower like this, but price might not do that though, because price need to retrace before creating an impulsive move. So I was expecting price to retrace back into this region first before heading lower. Though it's fine, you can still enter a trade right here. Though it's a price action, it's some of the price action look. If price broke out of a range and retest, you can sell. That's normal. But basically for me, I'm still waiting for price to retrace back into this zone before I start selling, because price need to retrace before creating an impulsive move. So I was expecting price to create another lower high, so before creating a lower low. So that's it. But it's still safe to enter a trade here. But for me personally, I'm not going to be entering a trade here. So that's it. So after mapping out the key levels, and also we will look at the chart, what price is doing, what the market is doing. So if price wanted to be falling from this level, the next level target is going to be this region. So the next level target is going to be at this region. So let me recap what I've seen on this. So to draw a valid key levels, a valid support and resistance level, you need to look for an area in the market where price touches multiple times, a minimum of 2 or 3 touches. So this is the first one, second about here, and this is the third. So the more touches a level has, the more stronger it will be. If a level has just minimum of 2 touches, it's not going to be stronger than that, like an area like this that has minimum of 4 touches. So the more touches a level has, the more stronger it will become. So you just have to go on the higher time frame, like the monthly or the weekly time frame, to identify an area in the market where price move away from significantly, and also an area that has multiple touches. And when you are drawing your key levels, it needs to be an area that nears where price is currently is. It, so it needs to be at an area where it was near to price, not an area like this. Not an area like this that even if price was going to get to this area, it's going to take years before price will get to an area like this. This area as well, it might take quite some time before price got here, but I just draw it out for the sake of the example. If I wanted to be drawing my key level, so it's just going to be this 1, 2, 3, 4. And also when you are drawing your key levels, you don't have to be paying attention to the ones on lower time frame or like on the 4 hour time frame, because it's going to make your chart to look messy. Like at this point there was also a key level here, at this region. This is the first touch. There was another touch if I move this a little bit higher. But if you keep drawing it like this, your chart will look messy, and you will even be finding it difficult to understand how price is moving, because you might be confused that okay, if you sell here, price is going to come here and still head back up. So you'll be worried about all those things. So you just have to keep it simple. Just draw the levels. The levels don't even have to be very close to each other. So you just have to draw a minimum of maybe 2 to 3 levels. So the more levels you have, the more confused you will still be. So you just have to draw, like, let's just say 3 levels, and the other levels you can just use a line like this to identify it, so that you will know that okay, when price go to that area, maybe you'll be moving your stop loss to break even. Let's say you are selling from this region on a 4 hour time frame. Let me go to the 4 hour. So let's say you are selling from this.
Let me see. Bring your plate.
So if you are selling from this region like this and you put your stop loss above here, so you know that there was a level here,
Daddy.
though you did not map it out with as a zone, but you, with the use of this
Okay.
black line, you already know that there was a level here. So when price got here,
No.
you might have moved your stop loss to break even, because price can do anything at that level. Price can decide to head back up. So when price go to an area like this, you might move your stop loss to break even, because this was still a minor level, a minor support level. So but you don't have to draw it as a zone, because if you draw it as a zone and it's still close to this level, you might be mistaken on which level to sell from, or which level to buy from. So just have to keep it simple. As you can see, my chart was clear. I can say that okay, if price was at this region, the next level is going to be here, and if price broke this level, the next level target is going to be here. So that is very simple. Just have to know how to draw your key levels properly. So do you have any question about the key levels, or I should just move on to the example? Maybe I should just show you one more example. Or do you
You
have?
try to show me one more.
Yeah, okay, let me still show you another example.
Come here. So come and eat food.
So when you are practicing how to draw your key levels, and you just be focusing on the major pairs like the Euro USD and the JBP USD, so it will be much easier on those pairs. So like I said, you need to identify an area in the market where price move away from significantly, or in an area that has minimum of 2 to 3 touches. So here is one, because when price, this was an area, this was the first touch and this was the second touch, and even without this level having minimum of 2 touch, when price got here, price move away from this level significantly. So that's the reason why I'll be drawing a level here, and as you can see, it still has minimum of 2 touches. This is the first and this is the second. And also when price got here again, price
Which
got
time frame are you using?
like the monthly time frame. I always say that to start your analysis, you need to go to the monthly time frame to know the overall direction of the market. So this market was trending to the downside. It was creating lower highs, lower low, lower high, lower low. So this, it was trending to the downside. So you will be only looking for selling
Why is
opportunities.
my chart a little different?
What do you
Why
say?
is my chart a little different from you?
Your charts are
My chart
different.
is a little different from yours.
Let me check it.
And yet we are on the same thing. You boys, I'm going to beat you. Come and eat food and go to bed.
You are on JVP USD, right?
Cedric, stop it.
You are on JBP USD.
You see what I was telling? Where have I gone now?
Are you on JBP
Let me
USD?
put my in. Yeah, that's where I was.
Search it again. Search JBP USD.
It was what?
JBP
GP, and
USD.
I was on G, GDP.
JBP USD.
I was on what? I
J.
was on euro,
Okay, that's
euro
JBP.
dollar.
Yes, I've just done with the euro dollar. So Okay. So maybe so that was you are seeing my chart. So at this level
Let
again,
me see. Mm,
okay. So
this level here, is it the one you're talking about here? This one here?
the screen is,
This one.
yeah,
You don't seeing it well.
not
Let me
clearly.
let me
I
clean my
think it's
camera.
below.
Can you see it well now?
Let me check. Yeah.
Is it this position here? Are you here?
Yes, that
Where
area.
my cursor is?
Yes, but drag it to the left little bit. That
Here.
area. No, to the upside a little bit. Yes, that left. Yes, that area. Yes, that you are pointing. You can draw it. You can start. You can draw it
This
from
is
there.
where you are.
Yes,
I draw my straight line.
your horizontal line. You can draw a horizontal line on
Horizontal.
the rectangle. Use the rectangle box, or you can still use the horizontal line for the practice sake. So draw it like that,
Okay.
and make
We are
sure it
there.
has the minimum of that to touch. That
Like
first and
that.
the second, yes, like that. So let me go down to the second example. So like I said, to identify a level, sometimes I need to identify a level where price move away from significantly. And as you can see, when price was dropping massively from this region, when price got here, price move away from it significantly to the upside, because this was a monthly time frame. And if it was on, let's say, on the daily, on the 4 hour time frame, you would have seen the move, so it was significant. So that's the reason why I would draw the key level from here. And also it has minimum of 3 touches. This is the first touch, the second touch, and this is the third one. So that's why I draw these key levels. And as you can see, at this particular point, price was ranging. It was moving from this zone to this zone. So, and after price broke out, it came to this zone to retest it before heading lower. So this confirmed that the zone is valid. So another there was another level here as well, because it has minimum of 2 to 3 touches. Let me draw it out. So as you can see, when price got here, move up, it bounced off it, and also here too. And there was another touch here. So the more touches a level has, the more stronger it will become. So that this is just the levels I will be drawing. So drawing the levels like this will make your chart looks clean, as you can see. So the chart will look clean, and you will know the particular point where price is going. You will know where price is heading and what is happening in the market. But if you have too many lines on your chart, you will be confused. So let's say even if you still draw, there was still another zone here. Let me draw it out. But it's not really necessary, because it will just make you confused. So let's say I still draw another zone here because of these touches here. This is the first touch, the second one, the third one, and this is the fourth one. So you can still draw a zone here as well.
Moment. Cedric, put off that thing from yourself. Come and finish food and go to bed. Take it back to the kitchen. Take it back. Come here,
So
eat your last spoon and go to bed.
so what I'm saying is that, let's say there was still a valid level inside this zone, but if you draw it like this and have too many lines on your chart
Have you
like
seen my
this,
one? Are we on the same thing?
yeah, yeah, we're on the same
Is
thing.
that it?
Yes, you draw it right. So that's it.
Okay.
Good. So if you draw a zone right here, it might be confusing. Like, you don't need to have many lines on your chart like this, because it might be confusing at a particular point in price. So you just have need a minimum, like just maximum of 2 to 3, like 3 key levels on your chart, so that you won't be confused. So like this now, I already know that what I'm waiting for at this point is that price. So this was a lower high, this was a lower low, this was a lower high, though price failed to create a lower low here and still create double top at this region, and then price created a lower low. So this seems like a lower high because it was lower than this previous high. So what I'm waiting for now is price to break this zone and head lower. So if price break out of this zone, my take profit level is going to be this zone, and this zone as well. This was a valid support level because when price got here, it moved away from this significantly. But I'm not going to draw it out yet. I'm just going to leave it like this with a line so that my chart won't look messy. So if I go down to the weekly time frame, so what I say is that I'm expecting price to break out of this zone and retest before I sell to the downside. But what price is doing right now is price is currently retracing to the upside. So I think price wanted to come to a region like this. So I will bring out my retracement tool to identify when the retracement is going to be over. So if I draw the retracement tool like this, so now seeing all these bullish and engulfing candlesticks, it seems that price wanted to retrace back into this zone and create a lower high before heading lower. So two things can happen. Price can come here, create a lower high, then drop, or price can still break this zone like before getting to uh this retracement to zone. So price can still retrace and head lower. But what I'm currently waiting for is price to get into this zone, and there was a resistance level at this zone as well, somewhere somewhere inside the zone. So there was a resistance level there. So I'm expecting price to get into this resistance level and this retracement to zone. So if price go into this retracement to zone and this resistance level, then I'll be selling from there, and I will put my profit to this next support zone. And if price got into this zone, because I know that it's a support zone, so price might still respect it and push to the upside a little bit. So I would have moved my stop loss to break even when price got here to this major support level. So that's how to use key levels for trade entries. So if you can identify it properly, it will be good. So you just need to have minimum of 2 to 3 touches and area in the market where price move away from significantly. So and also it must near the current price. So it must not be far away from where price is currently. And also a level can be support and resistance. So if support level broke, it will become resistance, and if a resistance level broke, it will become support. So that's how to identify major key levels. So let me show you one more example on AUD USD. So Australia dollar versus US dollar. So first thing first, I will go on the monthly time frame to identify the overall direction of the market where price is heading overall. So okay. So now the trend of this market as well is to the downside. The Euro USD, JVP USD, and AUD USD, they move like in the same direction. They are all trending to the downside on higher time frame because they are USD pairs, so they move this on the same direction. So if I wanted to draw my key levels, I can start drawing it from this area because when price got here, price dropped from it significant. Price move away from it significantly. So I can draw it like this, and it has minimum of 3 touches. So this is the first touch, and here is the second touch, the third one, and this is the fourth one, and
But,
also the fifth one here.
why is my chart like
What do you say?
why is my chart why is my chart like this?
Oh, you have pressed. Let me check. You have pressed the. You are using line chart instead of candlestick. Okay, go to this area. You are seeing my screen, right? I think that's where it was. So you will see maybe line chart or something like line. So you will click it and turn it to candles.
It is candle, you see? It's here candle.
Let me see. It's candle like I don't think it's that region. Yes, go to the
You
area.
said up
Yeah, yes, click on it. Okay, it's on
Mm.
candle. Click on the candle. I don't let me recheck. Let me check my see if I can get it. I know this area.
I needed to zoom, I think.
I draw this level because of the way price move away from this level significantly, and it has minimum of three, four touches. This is the first one. This is the second, third, and fourth, and this is the
Jerry,
yes.
a minute, please. Stay online. 1 minute. My son wants to pray and goes to bed.
Okay, no problem.
Okay.
It will make the chart to look messy, so that's why. So this one was drawn because of this touch here, another touch here, and this is the an area where price move away from significantly. And also this level right here, when I draw it, is because price move away from it significantly, and it still has minimum of three touches. This is the first, second, and third. So that's how you map out key levels, major key levels on the chart. So now, as you can see, and when price had gotten into these levels, price was respecting it. When price got here, it bounced off it, moves to the upside, and also when price gets here, bounce off it as well. So now the rest of the levels, I'm just going to be using this horizontal line to draw them so that the chart won't look messy. So I already know that if price as price broke out of this level, the next level target is going to be this black line. So I'm expecting price to come back to this black line before heading lower. But price, I think that price wanted still to retrace to the upside little bit because this was a lower high, lower low, lower high. This was a low and this was a lower high. So maybe price wanted to create another lower high before heading lower. So I think that's why this bullish engulfing candlestick is forming on the monthly time frame. But I already know that if price can close below here and trading below here, the next level target is going to be this black line. So that's how you use major key levels. So after drawing them properly on the monthly or on the weekly time frame, then you just be waiting for price to get to that level, and you'll be using price action like maybe the trend line and also for another confirmation to enter the trade, maybe candlesticks to enter the trade when price gets to all those particular regions. So on this trade, let me draw out the trend line and see.
Tell water from the hook.
So like I say, when we wanted to draw the trend line, you firstly start from the top. Let me do this first. So you start from the top like this and see how the trend line plays out. And as you can see, if I draw it here, it has minimum of two touches. So this trend line is valid, but let's say I wanted to draw it on the weekly time frame. There was still another trend line that can be drawn on the weekly time frame at
Yes.
this area.
Jaco Chayo.
So this was the trend line. Like I said the other time, the trend line needs to has minimum of two touches before it can be valid. So this is the first touch of the trend line. This is the second touch. So the third touch is the one that you'll be using for your trade entry. Right? This particular trade, I entered the trade somewhere around here because price was creating lower high. This was a lower low. This was a lower high. This was a low, but it was not lower. So this was still another lower high. And also there was a support level at this region. Let me just draw it out. There was
Are we on the same? Let's look at my chart.
yes, we are on the same chart.
Are
So
we moving well?
yeah. You are
But the ones you're saying that are touching the lines, I'm only seeing one. I think two. I'm seeing
the
there
other
is
one.
one which is up. There is two. This one here,
Yeah.
but it's not actually on the line. I
Say
didn't draw
say
it
the
well. I
say the
think.
trend line. I've deleted the one on the monthly time frame. So I'm using the one on the weekly time frame. Let me show you how I draw it. So on the weekly time frame, I draw it based on the touch here. If you go down to the weekly time frame and zoom out how where prices currently is. So this is the trend that is tradable. That the trend of that monthly time frame. does not have enough touches. So this is the one that I'm currently using now. This is the trend line I'm currently using for now. So
Yeah,
I draw
we're on
it
the
on the,
same track, I think.
okay. So I drew it on the weekly time frame. So what I'm saying is that on this trade, I was able to enter this trade because of this, because there was a support level here, because it has minimum of more than even 3 touches. So when price go to that level and go to this, so this was enough confirmation for me to enter the trade because
How
price was,
how can I hide this?
which one? Let me
This
see.
here. This
See those numbers.
rectangle, these symbols. Yes, the symbols here. How
This
can I hide them so that I can see up?
you can just bring them lower like this, like I did. Let me show you how I did now. So these symbols, let me take it back to the upside. It was like this before on my chart. So I click on this
Mm,
area. So and then I drag it down like this. So if you wanted to be using it, you just be using it at this area instead of at the top of your chart.
okay, it's
Yeah.
done.
Okay. So when price was at this area, the reason why I said the market from here is because price was at a resistance level. So I was looking to see, no, the overall direction of the market is to the downside. So I was already looking for selling opportunities. So when price got to this resistance area, I was looking to sell because price will be rejecting from the resistance area. That's the first reason. And the second reason is that the touch of the trend line. Not like I said, you'll be using the third touch of the trend line for trade entry. So the first and the second one is just to know that the trend line is valid. So the third one is the one that you'll be using for entry. So having the resistance level and the trend line intersecting at this region is enough confirmation for me to enter the trade. So and price was creating lower high, lower low, a low. It was not lower than the previous low, but it's still a low. And then price came back up. So I was expecting price to create another lower high before heading lower and created a lower low. So then I draw out my retracement to know if the retracement is over. And as you can see at this, okay, it was at this region. So I draw it like this. So price intersect the Fibonacci region, this Fibonacci region. So this Fibonacci level in a downtrend, it will be acting as a resistance and it will be acting as a support level in an uptrend. So having Fibonacci at this level and resistance area with trend line, so this is enough confirmation for me to enter the trade. This was a very valid trade to enter, because the reason why I say it's a valid trade, because those some people are just basically support and resistance trader, so they are going to be selling from here. And the more sellers that come into the market, the more likely for price to head lower. So those that are trading with the support and resistance, they are looking to sell at this region. That's the first reason. Those that are using just trend line for trade entry, trend line traders, they are also looking to sell at this region. And those that are using this Fibonacci level, this Fibonacci retracement too, they are also looking to sell at this region. So there is enough confirmation to enter this trade. And also for you to consider entering a trade, the trade you need at least minimum of 3 confirmation before you can get into any trade. So maybe the third confirmation might be candlesticks for entry, but before you can get into a trade, you need minimum of 3 confirmations so that you won't just get into premature trades. So okay, this is how this stuff is going to be like this. So when price goes to the level, I was looking for selling opportunity. So on the lower time frame, let me just do it on the daily time frame. Okay. So when price go to the level and I start seeing selling pressure, these candlesticks, they are signifying that more sellers are coming into the market. As you can see, the candlestick that formed when price was going up is this bearish candle, this blue candle. But when price goes into this one, price starts creating all these red candles. So all these red candles simplifies that more sellers are in the market, that sellers are taking control. So after having this resistance level, trend line and Fibonacci at this region. So then I will enter a sell position at this region, this bearish engulfing candlestick that signifies that, so the candlestick signifies that more sellers are in the market. So I enter the trade like this and my stop loss go above this level. So I put my stop loss above this level, this candlesticks level, this wicks, I put it above it, and my take profit level is going to be this next support level, because I know that that's the area that price will get to and react from, either move to the upside. So that's how I get into this trade. So you just need to master how to draw your major key levels, your trend line. So after that, then you will be using the Fibonacci. I know, let me just say, you will be using the key levels and the trend line for your trade entry. And first thing first, before you can be using major key level for your trade entry, you need to identify the direction of the market. So that's, I've already identified that price is trending to the downside on the monthly time frame. So I already know that I will only be looking for selling opportunities. So when I got the opportunity here, when I saw that okay, price was creating lower high, lower low, lower high, a low, and also I was expecting price to create another lower high, and also having this resistance level at this area and this Fibonacci was enough reason for me to enter a sell position. So I just use candlestick confirmation to get into the trade. So that's how you use like the key levels, the major key levels. So that's how it works. They are just going to be the one to guide you on when to enter the trade, when to get out of the trade, and where to place your take profit and stop loss. So do you have any question?
Most of the points of entering trade, I'm seeing they are at the sell point. Where do you put the the buy point? Where is the buying point?
The selling point, you know?
Because all
Yeah, I'm talking about the overall direction of this market is to the downside. So I'm basically going to
okay.
be talking
Mm.
about selling. So if I wanted to do that, I will have to go to a pair that was trending to the upside. So let me find one example on that. Let me okay. Okay, let me use good as an example. Okay. So on the monthly time frame, as you can see, the overall direction of good is to the upside. So good was trending to the upside. So when, and like I said earlier, some levels might not appear on the monthly time frame, but you just have to draw the one that you can see on the monthly time frame, then scale to the weekly or the daily time frame to draw other levels. So the reason why I draw this level is because when price got here, it got rejected significantly, and it has minimum of three touches. This is the first touch, this is the second, and this is the third one. So then I will scale down to the weekly time frame to see how to draw the other key levels. So there was some minor levels here. All these levels are minor ones. So the, like on trade like this that does not has enough pullbacks, as you can see, price was just moving to the upside significantly, and the retracement was minor. So you can just be using maybe a line like this to draw, to map out the level. So if price can come into it, then you can draw a zone. But as for now, that is the trade is moving to the upside significantly, so you might just draw the levels like this with lines. So if I go down to the daily time frame, there are there was a key level at this region, at this region. This is the first touch, this is the second touch, and this is the third touch. So basically on this trade, I'll be waiting for price to retrace back to maybe this region and start heading higher. So if I wanted to draw the zone, I will draw it from here So if I wanted, so it's going to be like this. So this is the first touch, the second one, and the third one. So I'll be waiting for price to come back down to a zone, to this zone, before looking for buying opportunity. So price need to retrace before, and if I bring out my retracement tool like this, okay. So if price retrace back into this zone and this Fibonacci level, then I'll be looking for buying opportunities at area like this. So there are some charts that if price was trending significantly to the upside, you might not be able to find all those key levels on higher time frame. So you just have to scale down to maybe the 4 hour or the daily time frame to look for the levels, to plot the major key levels. So this was the first touch, this was the second one, and here is the third one. So and here's another touch here. So I'll just be waiting for price to retrace back into this zone before I start looking for buying opportunity. Let me still show you one another bullish trend. Okay, let me use, okay, on USD JPY. Before starting your analysis, you have to go to the monthly time frame to look for the overall direction of the market. And as you can see, price was trending to the upside. It was creating higher high, higher low, higher high, higher low, higher high, and higher low at this region. So price was trending to the upside on the monthly time frame. If you wanted to draw your key levels, there was a level here at this region, because price moved away from it significantly and it still has minimum of 2 touches. So this was this was the first level. And also let me just go down to the weekly time frame to map out the other levels. So there was another level here. Let me there was another level here because it has minimum of 2 touches, and when price go there, price move away from it significantly. So there was, say, another level here. Let's see. Mm, so there was a level here too, and also there was a level at this region, as you can see. When price got here, got rejected and moved away to the downside, and also same thing happened here. So and this level still has minimum of 2 touch. So this was another level here. So I might just leave it like this, and this, and the one at the upside, I'll just leave it with a line like this. So on this pair, let me draw my trend line and see. I think price has already broken out of the trend line. If I draw it from the swing low, okay, yeah, price has already broken out of the trend line. So see, this signifies that price might be heading price might wanted to head lower and break out of this upward trend at the moment, because this was the trend that keeps. And the reason why I say that is because the first reason is that price broke out of this trend line, and the second reason is that price created an higher high at this region, though, because it was still higher than this previous high, because this high was formed because of this week. So this was an higher high and higher low. This was an higher high, and price needs to create an higher low maybe at this region. So if price wanted to create an higher low, price won't break out of this trend line. Price will just created an higher low at region, like at place like this. But price came down to create a double bottom, a equal low. So that signifies that price does not have enough strength to keep heading higher. So price want wanted to come head lower. So and also the break of this trend line. So this trend line is no longer valid like this. Maybe tomorrow I'll be talking much on how to draw trend line, how to draw it and all that. But so I think the market wanted to head lower on this particular trade.
Mm,
Price was still at a
mm, I see.
price was still at a support level. So I cannot still sell yet. And the other another reason that I say that price wanted to sell is that this was an higher high, This was an equal low. So price needs, if this trend wanted to continue, price needs to created an higher high again, but price created a lower high. This high was lower than this high, so price created a lower high. So all this signifies that price, the trend of the market wanted to change. So I'll just be waiting for price to break out of this region and retest, then I'll be looking for selling opportunities. But on how to draw key levels, so that's how you can draw your key levels. Just find a swing points in price, an area where price move away from significantly and has maybe minimum of 2 touch or 3 touch. So this is the first and this is the second one. And also there was a this area also can be considered a strong resistant level because price move away from it significantly. So that's that. So if price can break out of this level and retest it, then I'll be looking for selling opportunity. Let me show you another one more example. Okay, so on the monthly time frame, the overall direction of this market is to the downside because price was moving to the downside. But when price got to this region, it was moving like in a range, just moving sideways. It was not really trending to the downside. It was just moving from zone to zones. So if you wanted to identify major key levels on this trade, you can identify it through these levels. So this is the first level. Let me use this level. So this is the first level, and the reason why I map out this level is because it has minimum of 3 touches, minimum of 2 or 3 touches. So this is the first touch, this is another touch here, and this is another one here. Also there are still some touches inside this area. So that is the first level that will be mapping out, and the second one is at this region. So when price got here, so this level has minimum of 2 touches as well. When price got there, price move away from it significantly, and this area as well. So this is another level, and also there was an area here. So there was an area here too. So if I draw it as a zone, let me just map it out as a zone. So price, so this level still has minimum of 2 touches as well. Let me drag it to this area. Okay, good. So this level has minimum of 2 touches. This is the first, this is the second touch, this is the third, fourth, and this is the fifth. So that was another level. So this is the level that I'm going to draw on the chart. So the other levels, I'm just going to use maybe these two to map it out. And this was still another strong level because when price got here, move away from it significantly. So and it has minimum of 3 touches. So let me go down to the weekly time frame and see. And when drawing your levels, maybe when you draw it on the monthly time frame, it might be too big like this. So this level is too wide. So I will just adjust it on the monthly time frame, as you can see. So I will just adjust it like this. Maybe I will just adjust it a little bit lower, and this level as well. Okay. So I've already mapped out my levels like this. So now what is happening on this trade is that, like I said, the overall direction of this market is to the downside. So price wanted to head lower, but this support level is stopping price from heading lower. Let me draw it out. So price price needs to, when price was coming like this, price needs to break this level and head lower to create a lower low, but that does not happen. So price still retrace back to the upside to come and test this double top area. As you can see, this was a double top. When price got here, got rejected, and also price came to that area again to create a double top. So instead of creating a lower high, because this was a lower high, this was a lower low, so price needs to create a lower high at maybe somewhere around here, or maybe somewhere around there, and start heading lower. But that does not happen. Price created a equal low. So that signifies that maybe there might be a change in trend because sellers are not fully in control of the market again, because for price to continue, price needs to create a lower high and then come back down to create a lower low. Price was unable to create a lower high and then create a equal, a double top, and also price needs to create a lower low here, but price still fails to create a lower low. So if price wanted to start heading higher, price will need to break out of this level, then retest, then so the next level target is going to be this region. But if that does not happen, price can still head lower. So for price to head lower, price will need, there was a trend line at this region. So there was a trend line at this region. So price has already broken out of the trend line, you can see. So this signifies that price still wanted to come to the downside, maybe just to come into this region. So to how to get into this trade is very simple. We just bring out, so there was a minor level here. Like I say, a level needs to have a minimum of three touches. So this is the first touch, this is the second, and this is the third touch. So after price broke out of this trend line and this support level, I was already looking for selling opportunities, but I can't just enter because of the break. So I need to wait for price to break and retest this level. So that's what I was waiting for, but price didn't, that did not happen. So price break out of the level again and start heading higher. So I think price wanted to retrace. Let me bring out my retracement too. So I think the price just wanted to retrace into this zone and test this trend line again. So price can still come back into this zone, test this trend line, and got rejected from this Fibonacci area as well. So if price can get rejected from here, I might be selling from here and put my stop loss above, somewhere around here. My take profit is going to be this next resistance level and this next support level, I mean. So my take profit will be at this next support level and I'll be selling from here if price got here. But if price does not go to this region and then come back lower, to be trading below this level, I will still wait for price to retrace this, to retest this level again before I start looking for selling opportunities on this trade. So the major key levels are the ones that you'll be using for trade entry, like to identify an a point of interest in the market, an area where price will move away from, an area where you can buy or sell from, an area where you can take profit from. So just need to identify how to draw it properly, and then we'll be using it with other confirmation as well, maybe the trend line and the Fibonacci level. So we'll be using them hand in hand together to make a trading decision. So that's that about drawing key levels. I hope you understand that very well.
I'm getting you very well.
Okay, good. But yeah,
I'm getting you.
so
Now I wanted to ask these candles.
yeah,
Remember, each candle is signifying something.
yes, yeah,
Can
yes.
someone carry out a trade when they're just looking at the candles?
You can't just carry it. You can't just enter a trade with just looking at the candle, because a candle can form then still change. Okay, let's say, let me show you an example. Let's say you did not take all this trend line and these levels into consideration. You just look at this. Let me delete this. So you just look at this candlestick, this red candlestick that was forming here at the time it was forming. Let's say you just look at it and say, okay, the candlestick signifies that sellers are in the market, then you wanted to sell from here. So basically your stop loss will have to go just few pips, maybe somewhere around there, then you will target this level. So there's no way, like as you can see, the trade was a loss. There's no way you can use candlestick for confirmation. What you can be using candlestick for is after getting a confirmation, you can be using it as a support or resistance level. But candlestick cannot work on its own. Let's say without drawing support or resistance level, or without drawing a trend line, anything like that. You cannot just use a candlestick on its own like that. So you need to be using candlesticks with support and resistance.
I think the reason was why this guy. I think the reason was why this guy broke all my account. He
Okay.
was using candlesticks.
No. There's, You can't be using just ordinary
as a way
candlestick.
of trading.
There's no way you can be using candlestick, just candlesticks alone for trade entry. No, you'll be using candlestick with point of interest. Point of interest is an area where maybe a trend line and a support and resistance level intersect, an area where a support and resistance level where they meet. Let's say a area like this. So this was a point of interest. So an area like this, it was a point of interest, and some people might call it area of interest, whatever. So it was a point of interest. So when price got here at this area, it was a support level and also a trend line level. So this signifies that this trade is high probability one. So after identifying that price intersects at this area, then we'll be looking for buying opportunities. So the buying opportunities is with this candlestick when this huge bullish engulfing candlestick form. So this signifies that more sellers are in the market, they are coming into the market. So that's only when you can use candlestick for trade entry. So you just enter the trade like this after price got into this point of interest. You enter the trade like this, your stop loss few pips below the support level, and your profit target is going to be this area like this. So this is how it's going to be. So you can't just use candlestick on its own. You'll be using candlestick with area of interest with support and resistance level, trend line, and maybe a Fibonacci retracement level. So you'll be using them hand in hand, but candlestick on its own cannot work. Yeah,
That is why that guy blew my account.
yeah. So